Kitco News special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.
Hey everyone, I'm Jeremy Szafron. Welcome back to Kitco News, where we are on location in Vancouver, British Columbia at the Vancouver Resource Investment Conference. And joining us today is no stranger to our audience, Lobo Tiggre, of course, from the Independent Speculator. Thanks for coming on.
Happy to be here and meet you in person, Jeremy.
I appreciate this. It was a warm welcome. We were talking a little bit off stage how we are entering this commodities market in 2024 where there's some really good buys out there. I mean, there's some under-evaluated company, but there's also a lot of people at the show, which is kind of nice in compared to previous years. I'm wondering, going into this, what your takes are for the commodity sector right now, specifically in gold.
Well, I may have to go sideways with your question.
Let's do it.
A lot of our audience here is gold bugs.
Yes.
But it might be uranium, the other yellow metal, that's really jazzing up the audience. What
100%.
I'm hearing now is more questions about uranium, which of course has just gone vertical.
Yeah.
You know, it's hard not to get excited. That certainly gets attention. Even, it seems like mainstream outfits that couldn't even spell uranium last year are now talking about it. So, interesting times. But it's significant that, you know, to feel a positive buzz in a crowd like this at a time where it seems like the sector sentiment is still poor.
Yeah.
You know, maybe we've reached a tipping point. And if that's right, this isn't a prediction, but, you know, if that's right, you know, it's an interesting time to be looking at the bargains that are still on the table.
Yeah, and what do you think? I mean, let's go, well, we're going to talk about gold, obviously, a little bit more because you are bullish on gold, but let's flip back to uranium. Obviously, we've seen a price increase for that commodity. It's a huge market. There's not a ton out there. We're seeing some guidances being brought down from what is existing in the marketplace. Is it exciting? Is it just one of these secular runs? What's your take?
Uranium bugs are not always going to like it when I'm frank here, but yes, it's exciting.
Yeah.
And it's not just I'm long-term bullish. There's a scenario in which uranium could, even though it's already gone vertical, go even higher this year.
How
but
high?
It has gone vertical. We could be looking at $150 uranium by this summer.
Wow.
That's a could.
Yep.
It's an if not when statement. And what would do that? Uranium is getting the green mantra, right? Geopolitics threatens supply. The United States is considering banning Russian enriched uranium, and it's not like you can put something else in a nuclear power plant, right?
No. Yeah.
So there are triggers here that could, not will, send uranium even higher. That having been said, you know, it did just go like this. It's not possible for me to look at the audience in the face and say, never mind the 15-year high, buy. I just can't do that.
Right.
You know, the odds are that we're going to look at a correction.
Yeah.
Right. And that's just the way markets work. Nothing can go vertical forever. So let's not lose the threads here. The key points are, if you're absolutely out, you're not long uranium now, you just notice, holy cow, triple-digit uranium, let's put it on your radar. It's not too late. There's a multi-year, multi-decade bull market ahead. I firmly believe that. I am fully invested. But trading history, just the way market works, it suggests that there will be a dip, and that will be a great opportunity for those new.
Yeah.
And for those of you who are already long, you know, don't sweat it. If you made good picks, the better companies are at 52-week highs or multi-year highs, you're fine. Just ride it out.
What do you think about those? You mentioned maybe like a 3-year run on this. Is it just a supply and demand issue? I mean, obviously, the general population is coming around to the idea of nuclear energy. We know that we have energy crisis happening around the world. There's energy shortage when it comes to other things like AI. Where are we in terms of that 3 years? And is it just based on supply? We don't have a lot of junior miners out there with big uranium deposits.
Well, one of the strengths of this particular market is that the demand side is kind of carved in stone. Like the supply is already insufficient for current demand, and all the projections, like all of them, are for increased demand going forward. We don't have to add anything, you know, some new discovery. It doesn't have to be AI's demand for energy.
Yeah.
You know, just the plants that are already being built are going to increase, already being built. Never mind the ones that are planned, and never the ones that are conceptualized, right? The demand case is so strong, it would literally take another Chernobyl to derail that. Nothing less than that. And I know uranium bugs hate it when I remind people that, yes, this is a sector that can literally melt down on us. right? But that's serious. Like, if you're an uranium investor or you're going to go in this space, you have to understand that this is something that can literally blow up on you. And if you can't take that, don't go there.
Don't go.
Now, these are extremely rare events. I mean, even Fukushima, it was a tsunami. 3 Mile Island didn't kill anybody.
Right.
We really, in the entire history of nuclear energy, have only Chernobyl as a really bad nuclear incident. And that could, if you watch the movie, that's really more an indictment on the Soviet system than nuclear energy.
Yeah.
So it's safe, it's needed, and we've got the fundamentals behind uranium and have had for years. We have the technicals now on uranium side, and actually that's now for years. What's really the game changers are two. We have now the narrative, right. The green mantra of this is green energy, the powers that be realizing, holy beep, we're not going to meet our climate change goals without nuclear.
Right.
This is just physics trumps story every time. This is just reality, and they're getting that. So there's that. And then you have geopolitics. Like if the U.S. does put in new bans that changes the marketplace, it doesn't have to happen, by the way. The demand cases we talked about is there anyway. Mm-hmm. But if on top of that, the U.S. gets stupid about uranium, or political about uranium, right, that's just sauce for the goose. It adds to it. So I want to be clear because there's so much to be excited about this. Like, it's actually very exciting. Like, I just gave you a ridiculous number, it seems like, but actually, adjusted for inflation, $150 uranium isn't really even an all-time real high.
Generational opportunity here?
Potential, but my sincere guidance for whatever it's worth is FOMO is never a good idea. Don't buy anything that's at a 52-week high. Just don't. Yeah. There are some of the stocks that are not at 52-week highs. You don't want one that doesn't respond to uranium at all. That something's wrong with that. Yeah. But there are some in between. They're not trading at all-time highs or 52-week highs, but they're not sitting there ignoring the uranium price. Look for something that still has a value proposition.
Would you give some insights into who those are?
No.
What are you looking at?
No. Even Michelle can't get that out of it.
All right. I thought I would try.
No, that's what people pay me for. So, but there's opportunities here, and broadly speaking, if you can resist the FOMO, I think the odds favor a buying opportunity in the near term before the next big leg up. And if that happens, that would absolutely be a time to deploy serious capital into this space.
Right. Yeah, and run with the ride, obviously. What other commodities are you looking at for 2024, the year of?
Right. Gold, actually. Okay. And this may not sound like a big headline, gold bug likes gold, but remember, last year my top conviction trade was uranium. So I'm not an always gold all the time guy. This year, it really is gold, and the reason for that is, and I know you wanted to talk macro a bit, so we can work this in.
For sure, let's please.
I'm still in the team hard landing.
Okay.
I think the world is in a global recession now, and you look at China and Germany and places, that's not too hard a case to make. Where I differ really with other people is that I say that the U.S. is in a recession now, and I know the GDP says something else, but it's not just a GDP conspiracy, it's just not a very good measure. Yeah. And I know that the unemployment rate is like near record lows and so on. But I think in the post-pandemic world, the briefcase is labor hoarding has distorted the significance and importance of that statistic. And if you look at just about everything else, besides the good labor market enabling people to charge up their credit cards and keep spending this last December, basically everything else is flashing red. We've had a manufacturing recession. We've had an earnings recession. We've had a freight recession. We've had recession, this, that, and the other. We've got the leading economic indicators just came out negative again, right? And yield curve disinversion. That is not just a strong indicator. That is an unbroken track record indicating recessions. There's so many different, the federal revenues. There's so many indicators, all of which are flashing red. So either this time is different, or we are in and heading deeper into recession, and that I see it as masked in the United States, and that becomes unmasked, I think, this year.
Yeah, it's interesting.
Sorry, but we got there because of gold. Yeah, and gold likes recessions. Like, gold does well in recessions. So if I'm right, it'll be really good for gold. If Team Soft Landing is right, that's actually still good for gold, because a soft landing is a recession. It's only the no landing scenario that's not good for gold. Right. And if there's no landing and the economy goes on, I'm just completely wrong. Economy keeps moving up. My other yellow metal investments, uranium, will I think, more than make up for any, loss of altitude on the gold side of my portfolio.
Yeah, interesting. I mean, I want to get back to gold because we keep jumping off from it, but you bring up an interesting point. We're talking about the United States and some of the data coming out. And today you were tweeting about this buy now, pay later for consumers. And I want you to explain to the audience really what's going on with spending in that country.
So, well, I can't explain the whole country.
Yeah.
But there's two really striking data points we got today. The same morning we got news. It's, we've been watching for a while. We've seen total credit card debt going way up. We're seeing credit card delinquencies going way up. We're seeing, car loan delinquencies. The people over borrowing is a real thing in the supposedly robust U.S. economy, right? But the headlines today were so striking. It wasn't just record buy now, pay later spending. It was buy now, pay later on groceries, of all things. So it's not like, I want this mink coat I can't afford. I'm buying now, paying later for diapers and SpaghettiOs. That's not a good thing for the economy. The same day, same morning, we had this other press release. I can't remember if it was Bloomberg or Reuters or somebody did a poll of U.S. economists. And for the first time since the post-COVID era, the consensus view has been soft landing, which is, regardless of what some of the talking heads say, that's still a recession. A soft landing means it's mild, right?
Yeah, by definition.
You're coming down, but it's just not going to hurt so bad. There's a lot of conflation out there that this means no recession. It's incorrect. But now, same day we get buy now, pay later for groceries, we get for the first time, the majority of economists polled think that there will be no landing, there will be no recession at all. Wow. How do these two things fit together?
How do they? Where are they getting
don't.
it?
I think the real world, the average person on the street is feeling the bite of reality, and disinflation is another one of those words that shouldn't even exist. It sounds like prices are getting less. It's not.
No.
The rate of increase is getting less. It's still an increase. Life is not getting cheaper, and people out there can feel it. And yet you have this narrative of disinflation, of things looking better. And I actually think it's, frankly, irresponsible, if not unethical, for people who should know better to encourage consumers to go out there and spend because everything's fine.
Yeah.
Why not buy now, pay later for necessities?
Right.
If the economy is getting better, the Fed's beating inflation, everything's going to be fine. No landing. Right? Well, it's no landing, everything's great. Well, why not take on more debt? Interest rates are going down.
Sorry, not the best economic scenario for this year.
No, it's bad economic advice.
Of course.
Let's say I'm wrong, right? And there is no landing. The prudent thing to do would be to see the proof in the pudding.
Right.
And not just go out and charge up things now and hope that you're right. By the way, same morning we got not record number of bankruptcies, but a 98% increase in bankruptcies in the United States, not the global, this is the exception, American exceptionalism, right? The U.S. economy is so strong. 98% increase in bankruptcies in the United States over 2022. Crazy. And yet, Team Soft Landing is now morphing into Team No Landing. Mm-hmm. Sorry, but I think the wrong way Corrigans of economics are going to regret their shift.
How do you educate the consumers then? I mean, how do you tell them, listen, your spending habits are out of control? Do you think that they've even began to understand this, or they're feeling the pinch, but is there a bigger pinch to come?
Well, some of my dear fellow gold bugs may not like this, but Kitco audiences might get this. I actually think the gold community, or the hard money community, gold, silver, owes a debt of gratitude to the crypto crowd, even the Bitcoin maximalists, for educating two whole generations of younger people that old boomer gold bugs were never going to convince to question the merits of fiat currencies. Younger people didn't even know what fiat meant, and if you tried to talk to them about it, as an old gold bug boomer, they'd run in the other direction.
But conspiracy.
The crypto crowd has been able to make the case for us, has been able to explain to people who would not listen to us.
Right.
I'm not us. I mean, your beard isn't as white as mine, but
you
know what I'm saying,
I do.
right? We were not going to convince these young people to question what the governments of the world are telling us about these funny little colored pieces of paper they call money.
Yeah.
And the crypto crowd has done that for us. That educational wedge into that mindset opens up the possibility for other things. And I don't know if you're seeing this, but I'm seeing at this show a lot more people with hair.
Yeah.
And hair that isn't all silver.
Absolutely.
And I mean, young people right there in the crowd. at a metals and mining conference,
100%.
right? And a good chunk of them got here because they either made money with cryptos, or they got interested in speculation through that, and they understood about the dangers of fiat currency, and then they started, well, what else is there? What else is in the universe besides Bitcoin or whatever? And I've had people on my staff who came to gold specifically through with the cryptos.
Right.
So a bit of a long-winded answer, but I'm actually quite optimistic on the educational front. The crypto crowd is helping us here.
Yeah.
So gold bugs of the world, stop heaping hate on the crypto crowd. They're helping educate young people to question the whole fiat world.
Where are we with that education? I mean, we still can't find a buyer, right? When you look at the equity market for the juniors specifically, stocks are not doing very well. Evaluations are the lowest they've ever been. Are we almost there? When do you think that we'll see some inflow?
Are we there yet? Are we there yet?
Are we there? Are we there?
Right. So first, I actually think this is very good news for buyers.
Right.
Okay, if you're a long-suffering gold bug, you're all in and have been for years, you don't want another buying opportunity. You just want payday. I get that.
Yeah.
Sorry, but you know what? Mr. Market doesn't care what we want. That's
100%.
just the reality, right? Hold tight. I think you will be right. For everybody else, though, if you have some cash or some new cash, or you're new to the sector, I think this is actually spectacular. You've got gold holding plus or minus $2,000 for 3 years, despite major headwinds, higher dollar, lower interest rates now we're headed for. Gold doesn't pay interest. All this stuff that should have knocked gold back down didn't for years.
Right.
And now we're going into, I think, a recession and then reflation. I think we're going into an environment where gold goes higher, but not starting from $1,000, starting from 2,000. It gets kind of exciting. You start thinking about where that's going. So the fact that the gold stocks, on average, as an asset class, have not performed. They haven't. The alligator jaws are opening. So I think that's terrific news. It means that you haven't missed the boat.
Right.
Gold is still at or near record nominal all-time highs. So don't get the gold, get the gold stocks, which are still on sale. Now, how you get hurt would be if the alligator jaws snap shut by gold dropping to meet the stocks, which is what the market is telling us, honestly. That's what the industry is saying. The stocks are saying that gold is going to come down to meet the stocks. The markets are forward-looking. I think that's wrong. Yeah. I think the stock's going to come to match with and overpass it in the end. I think the alligator jaws will snap shut with the lower jaw rising. It's not a promise.
No.
But I am putting my own money on this thesis. I think it will happen with a vengeance, and I think it's a spectacular opportunity for anybody with cash to deploy in this space. And I think this is a 2024 story.
Interesting. I mean, that's a big enough one itself. When you're thinking about 2024 and you're thinking about looking forward, is it this market only that we're going to see some price appreciation in on commodities? Is there anything else you're looking at?
Well, I wouldn't say this market only. There's several ways I can go. For resource investors, I would focus on gold as my highest conviction trade.
Right.
Michelle already got that out of me. I still am very bullish on uranium, but when it's just gone like this, and many of the better stocks have also gone like this. They're trading at 52-week highs or multi-year highs. I can't tell people rush out and buy it.
Yeah, you said don't chase the chart.
Right. But buy the dip. Okay. Whereas gold, the stocks are still cheap. So that's what makes them more compelling. But I like both for this year.
Right.
I just see a more compelling valuation case on gold over the other yellow metal at the moment. But I'm very bullish on both. And I think uranium is recession resistant, whereas your copper and oil and other things are not, which goes to the other. So basically, this is pretty simple this year. My marching order is very simple. No copper, no oil, no lithium, no nickel, no industrial minerals at all until we're sure or reasonably sure that the recession has done its worst. Nobody can time the bottom. I can't do it. Not even Rick Rule or Doug Casey can do it. But it looks to be in front of us still.
Yeah, and it seems like no one can call on the timing for this recession either.
Right, but it'll be obvious. Either it will happen and you'll know it, or I'll be wrong and you'll know it. So we won't have to wait forever on this. We'll get clarity this year, I think, and then we can make a decision. So what I'm saying, though, is it simplifies things.
Yeah.
The question of this recession, which I think is still in front of us, it takes basically everything else off the table for now. And I say this as an uber copper bull. If you ask me long-term 10, 20, 30 years from now, my highest conviction trade would be not gold, not uranium, it would be copper.
Right. Longer hold. 20 is the go? 20?
But am I buying more copper stocks now? Why would I do that if I think we're going into recession? Recession always whacks industrial minerals. Always. It's an unbroken track record. So in many ways, life is simple for me right now. It's the two yellow metals.
Yeah. I mean, it actually makes sense. When you look at the geopolitical situations happening in the world, I have to ask, we got the Red Sea, we have what's happening in the Middle East as well, within war. Has anything surprised you about what's come out of the gold market with all this happening? Has there been any surprises? I mean, we have China increasing buying.
Right. Yeah. Well, how to invest for World War III.
Yeah.
If World War III happens, we're going to have other concerns, I think, than our stock portfolios. So the simple answer is actually, it's not how we invest, it's how we prepare. And absolutely, one of the simplest and smartest things I think to do is to buy gold. And it's not as a speculation, gold prices are going to go up. It's gold. It's a physical form of wealth you can hold in your hand. It's a long for which there is no short, right? And if things get really bad, then you want that as insurance. You want that as savings, as a backup. And you hope to heck you never have to use it. But if you need it, right, you want that there. So I think that's a no-brainer. And if it happens to be that things get scary and safe haven demand sends the gold-dollar exchange ratio north, great. Maybe you can make money on it as well. But that's not the reason for buying it. The reason for having bullion in your direct physical control is to be able to sleep at night.
Yeah.
And so the thing about the geopolitics, though, is that I think it's also one that it doesn't hurt uranium. Like it can, I don't know what that'll do to copper or anything else, but nuclear power plants, there is no plan B. It's not like the Mr. Fusion in the Back to the Future movie where you can pour beer in there, banana peel or whatever, and it works. It's not like that. You've got to have the uranium, or for the power plants, the enriched uranium, right? There's no substitute. And that's baseload power. And then,
which we need more of.
Right. So I'm not betting on World War III. I'm saying if it does happen, I'm glad to own physical bullion. If it feels scary, then I think both yellow metals do well. And if nothing happens, great. I don't want World War III. Yeah. And both yellow metals still do well.
And uranium could be potentially recession-proof at this point.
Or at least recession-resistant.
Right.
I would say if we get to this, the scales fall from their eyes and the recession deniers are suddenly, oh my gosh, things are bad. One of the things, like I said, industrial minerals always get whacked.
Right.
This broadly includes the so-called energy sector. And so there's a knee-jerk reaction where people will sell everything energy-related. That doesn't just mean oil futures going down, it means the stocks, uranium stocks. And it's a funny thing, so spot uranium in a case like this would likely drop. Contract terms wouldn't.
Yeah.
Right? And the spot cannot vary from the long-term contract price for long. So I actually think this would, I don't want to be calling for schadenfreude here, but if we get this big market shock and spot uranium drops and the stocks drop even more with gusto, I would wouldn't take out a second mortgage, but I would, have a garage sale, sell some extra blood. I don't know. I would raise every bit of cash I could to buy that dip because I think that would be a spectacular buying opportunity. I mean, my outlook right now is generally it's gone vertical, so a normal dip or correction is par for the course here. But I'm not talking about that. I'm talking about if there's an actual market crash, like a flash crash 2020 style or a 28 style event, I think we will get a tremendous buying opportunity in uranium stocks. Like no-brainer, like the best of the best, you'll be able to get them for 50% off or something like that. And that would be a gift. That would be an absolute gift. I would be buying with both hands.
That's the generational wealth thing.
That's the generation. Yes, what you said.
Yeah. Lobo Tiggre, thanks for coming on.
Much.
I really appreciate your time today. And we appreciate you watching, of course. Don't forget to subscribe to our YouTube channel for the latest breaking news. And I'm Jeremy Szafron with Kitco News. We'll see you next time.
Kitco News special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.